Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Wednesday, everybody. Happy FOMC. Happy FOMC Wednesday, everyone. So just a quick heads up, 2 p.m. today, we've got the Fed statement. Clearly, there's going to be no change to rates, but the messaging is all going to be about what tweaks they've made to the statement, and then going into the press conference at 2:30. So really interesting morning in terms of what we're preparing for after yesterday's weakness. A lot of folks ask me, would I consider that a sell-off? I mean, clearly it's weakness, right? But whether it's a sell-off or it's a rally, the direction is actually less important in some ways than have we crossed over certain thresholds, have we moved through certain levels that would change hearts and minds, right? Have we moved through a level that would be considered a breakout? Have we retraced to a level that would be considered a level from which the buyers might want to step in? Are we holding in a range? Is it an inside day? Is it an outside day? So we want to get a little bit more granular as to, is it a sell-off? Well, that's just a very general view. Is it a rally? Again, general view. Today, right now, we'll see whether or not a little bit of strength that we're seeing early, and it's so early, is going to turn into some meaningful positioning once we understand where the Fed is. And where does the equity market want the Fed to be? Really in no way turning up the volume on that less accommodative stance that they're in right now. And really, I think what would be very bullish is for the Fed to cite a lot of headwinds. Cite those reasons. I mean, we know what some of them are going to be. Cite some of those reasons that would justify the Federal Reserve either staying the current course to those eventual 2023 rate hikes, or even giving the market some expectation that they're not fixed on that date. That might be expecting too much, but ultimately, that is what I'm looking at going forward. All right, so with that being said, do I like ZS? I can't say that I do, because right now, these are, the question is it trending up? I don't believe so. It's neutral at best. Bearish sentiment and momentum, neutral trend. So I think the simple answer is no. The not so simple answer is, it seems to be stable above the 200 exponential on the daily. But I would also add that this is not the current environment that was so great since probably Q3 of last year, coming into Q1, Q2 of this year. That reflation trade was broken in June, really across the board in everything but energy. So I would say no, it's not trending up, and I really don't have it on my radar right now. So thank you for the question. Next up, kind of liking the pattern on IDT 30-minute. I'll make a intraday determination. If you like the pattern, awesome. If you've got it set up, go for it. I will say that I would like it to be a bullish pattern, if anything, because the overall direction of IDT, talk about a beautiful buy the dippable double green kind of market. I mean, that's fantastic. That structure, as long as you are not fighting the broader trend, is exactly what made 2020 great for so many traders. As I've said many times in our charts and coffee shows, there are corners, there are glimpses in this current 2021 market of what 2020 looked like. There are glimpses of those great trends, and this is, good eye. This is definitely one of them. What should I do with a QQQ 368 call expires today? Oh, okay. So I mean, clearly you want some bullish momentum. I mean, in the most basic sense, you want some bullish momentum to take profit into. You want some bullish momentum to be able to get, a higher ask. See that ask continue to climb, and preferably your order executed at or near the ask. I mean, bullish momentum is going to be your best friend at this point. Where is the market going to be by day's end? It's anyone's guess. So I'm not going to make a prognostication on where we're going to be at the end of the day. I don't think I delude myself that badly anymore. So the path of least resistance is definitely up. So this is probably going to be a situation where, that old saying in football, we didn't lose the game, we just ran out of time. I think that's where, a situation like this is going to land. So again, John, I hope it moves higher for you. I mean, it certainly is the path of least resistance. But I think, theta decay and this uncertainty around the Federal Reserve will make for maybe some opportunity to take advantage of bullish momentum. I'm just going to come back to, trying to do your best to grab some of that bullish momentum. All right. All right. Next up is ZB on a pullback to the 13. Well, I love the long bond position. And, I think a lot of folks might not know how long this bullishness in bond dates back to. So you'll see back in here, and my futures folks will know this, as will the sector secrets folks. You see this 1, 2, 3 pattern back in here? I don't know how many of you are familiar with it, but that's a trend reversal pattern, the way this one formed. And so once really April 14 was an important date for those of you that are looking bullishly at the bonds, because that's when the 1, 2, 3 broke out. And really anything that happened subsequent to that had a little bit more of a bullish directional bias. Yes, it was neutral and choppy, but having broken the previous trend with this pattern in this manner is often the precursor to the organization into a double green uptrend. So these become fadeable buys through end of April, through May, even through June. And then once we go double green, as you can see, it happened on the 6th or 7th of July. Now it's easy double green by the dip. So, we've been bullish. I've been bullish this market since April. So this is not a new bias. It's actually more along the lines of this is bias that now has taken the 1, 2, 3 reversal and it's turned it into an uptrend. I've got to get my hair cut. This is actually making me borderline crazy, this darn hair. So anyway, so that's what I would say is the plan with the bond market. Am I going to buy the 13 more specifically? No, I can't. So why do I say I can't? My tools are designed to give me a really binary view of can you or can't you? When you get to that level of automation in your analysis, it makes life a whole lot easier. I don't have yellow propulsion dots, so 13 is a no-go. I do have green propulsion dots, and that means a 21 is a yes. So I'm with you, pull back to the 21. And I think one level you can look at in lieu of that would be the VWAP. So you could look at the VWAP. We bought the VWAP last time. This was a VWAP buy on the 21st, and I'll look for another pullback. Those of you that have been joining me for this show for any length of time will know it's not a matter of what I think or what I believe or, whatever. I am really purposefully limited to what I can do based on my tools. And that is by 100% by design. So thanks for the question. All right, next up is, hey there, Dan. What do the colors of the free Darvas levels mean? Well, they mean the same thing as the 3.0, the premium version. It's just basically the pattern that precedes, so there's a little candle pattern that precedes the actual formation of the box. So you have patterns and formations, right? Every Darvas needs a minor low and minor high. and then there's a specific candle count in between, which would make it a box as opposed to just high and lows. And then, you make a box in any old spot. No, it's a very specific candle count between the minor high and minor low. So if the box began with a minor high, it's yellow. If the box began with a minor low, it's purple. So you can sort of say, the differentiation in color is probably pretty unnecessary, but I don't really care if the color is purple or yellow. I really don't. But it is a differentiation between a minor low starting with a low, a Darvas box starting with a minor low, or a Darvas box starting with a minor high. So loosely, you can sort of call them bullish and bearish boxes, but really, I don't care what the colors are. They're really unimportant to the most straightforward analysis about a box, which is that it is simply support and resistance. Okay. All right. So next up is, bear with me here. Good morning. Good morning. Great to see everybody. Hey there, William. One of your older prior picks was Generac. Oh gosh, I've been in Generac for, at this point, years. Generac is one of those positions that I call the local knowledge required. I love getting long Generac, and I have also NEE in the past, based on their tendency to do well during hurricane season. I live in Florida. I have for a lot of years. And so it's just one of those positions where you look at certain stocks that tend to do well during season, especially if a storm hits. My old joke to my husband used to be, what's the last thing I do here in the office before the lights go out, before the power goes out, when the storms are coming? And it's get long certain stocks that I tend to know will do better in the aftermath of a storm. So, and I can laugh about it because I'm in Florida, right? I'm in it. But that's usually what it is, So is there anything that I can do with it now? Not at these levels, really not at these levels, but I still like it. Pullback buys are valid in any double green. And then you've got Generac doing its thing. We're in hurricane season. What's not to like? What's not to like? All right. Hey, Jamie, ask a really good question. Raghee, do you ever short anything? If it's double red, look, with the Federal Reserve being as accommodative as they have been, accommodative meaning what? They're printing money, they're buying mortgage-backed securities, or buying bonds, right? That they're basically shepherding market participants into equities. Where else are you going to get yield? Where else are you going to get any alpha? So it's got to be double red to even think about the short. It should macroeconomically sync up also with sort of these giant gears of monetary policy, money supply, growth, and inflation. And that's been a tough couple of boxes to check at the same time. Now, I will say, I think we talked about this yesterday, Chinese stocks. Everyone's talking about Chinese stocks. For crying out loud, this KWEB, FXI, MCHI, these have been in downtrends since late February, early March. These are not new downtrends. In fact, if anything, I'm starting to get slightly bullish on these. But my point is, would I short anything? Once we go double red in the JT multi, once we're dominated by red grab candles, yes, there are shorts available. But I will say, I love to short. It saddens me that I do not have double red because personally, all of us find what our pitch is. For me personally, I do far better in downtrends. Case in point, in 2020, my best month was March. That was in the middle of that move lower. I trade downtrends really well. Gravity, I understand it. I play it. I think sometimes the ridiculousness of parabolic uptrends can be really difficult to trade. They don't resonate with me. When we had the tech bubble, 2000, right? 95, 96, 97, 98, 99, 2000. I did better on the move lower because the move higher made no sense to me, right? That's where a little knowledge was dangerous. That's where having some experience. Sometimes the best thing we can do as experienced traders is just forget what we know and just say, this is the way the markets are responding. But downtrends or sell-offs for me are far better environment. So I do, but I just can't find anything that is working for me, again, to check the box, not only on the structure, but also on the macroeconomic trend. So I hope that makes sense. All right, next up is how is Darvas different from ATR stops? Tony, it's how is a peanut butter and jelly sandwich different from a bologna sandwich? It's just two completely different things. They're both sandwiches, but what makes them is so absolutely different. So Darvas is using price and price patterns. Average true range, now you're talking about really starting to look at the market through the prism of Z-scores and standard deviations. And so they're completely different animals. And I don't think they can't, I think they can coexist really, really powerfully. So the calculation, so what is different? The calculation, what they're looking at, how they're looking at them. Very, very different, and I love using ATRs. I like using Z-scores on things. I pull a Z-score on the volume weighted average price. So I like Z-scores a lot. I love standard deviation looks at the market, but they're just, I don't know how else to say it. They're just really two completely different things. I don't want to get into the weeds about the calculations, but probably the easiest way to differentiate the two is one really is Darvas, a chart pattern based on a specific candlestick and the days in between, a candle count and a specific pattern. An average true range, now you're walking into the whole Z-score type of look at the market, both of which I love. Okay, next up is, and by the way, those of you, I can recognize a lot of names here in the room. Those of you that are members of Sector Secrets, in about 2 minutes, I'm going to be with you all in the chat room like we are every Wednesday at 9:20. But this week, we have our monthly live trading. Now, we do live trading every Wednesday, but this is our slightly longer session. And I'm looking forward to seeing you all there in our Wednesday live trading session. We'll take a look at the intraday setups. Those of you that just took the playbook class, I think you'll love this session as an addendum to that. And then we're going to take a look at, what Powell could trigger as far as corrections, what my favorite sectors are, what those sectors that are just waiting for some sort of pullback that we can, take advantage of. So lots to get excited about in terms of preparation for the volatility to come today. And if you're interested in some of the processes that I use when we're here in the room together and some of the indicators and so forth, this coming Monday, yes, just right around the corner, August 2. Can you believe August is here already? But we're going to kick off the month of August with a webinar. So make sure you take a moment, go ahead and register over at simplertrading.com/scale. And a lot of the ways that I'm looking at the market, why am I long ZB? Why am I saying QQQ and XLK and XLV and XLC are such viable trends? And what are the rationales and setups that we use? I think you'll really get a lot of benefit from that webinar on Monday. So this coming Monday. All right, next up is, let's see, bear with me here. The membership, it's called Sector, as in sectors within, ETF sectors or sectors within an index, secrets. FCEL, sure. That's a no. Downtrend, good downtrend, Robert. Definitely good downtrend. As far as what I would do with this, I'd probably be a little bit more keen. Look, it's a $6 stock, right? So the short side of this is not as interesting to me. What I would be pretty keen on is, can we get a 1, 2, 3 and a reversal? So kind of along the lines of what I talked about regarding the bonds? Can I get some sort of 1, 2, 3 reversal to help catapult, or at least break the downtrend and catapult this thing higher? Okay. All right. So that is it. Thank you as always for your time. I'll see you all again, same time, same station tomorrow. I'm heading over to the Sector Secrets room right now. I'll see you all for our live trading session. In the meanwhile, remember, 2 p.m., this market's going to be aware of the Federal Reserve. So this is not a normal morning. It is a caution day. Be good to each other. I'll see you tomorrow.